John, it's spring out there and we're sitting here. So let's talk about something.
Every day I've wanted to leave early and I sit here. I got spring fever. I want to get out of here, but we do have an exciting episode. I knew we had to be in here late. There's lots going on. I mean, we're going to try to keep this an organized episode, but I want to talk corn and that March 31st report. Are strangles and straddles going to be a good idea? We're going to talk specific strategies, and definitely we're hitting all the markets you think we're going to hit. Oil, cattle, soybeans we're going to spend a lot of time talking about, and we want to really we're going to push you towards at least entertaining the ideas of hedges in soybeans. But it's going to be an exciting show. Hopefully we can get it all in one little episode here.
Let's go.
Welcome to Hedge Heads, where hosts Jon and Ryan Tungseth discuss commodity markets, hedging, and anything related to trading futures. Remember, the risk of loss in trading commodity interests can be substantial. These are opinions only and not trading advice. While no one knows where the market's going, they're not afraid to share some ideas.
Well, John, beans are up. Do you think the bins are swept?
I do. Guys have been using this rally to sell, and obviously we have lots to talk about this episode. We'll just take it step by step. The conflict in the Middle East is what we'll call it, I guess. I don't think it has an official name. Epic Fury is the official operation. Yeah, exactly. And how is it gonna the call? It's generated plenty of calls. It's been very busy, and what are the calls about? People are generally confused what this means, and we'll kind of try to go over that, and touch on some of this stuff. The big trade is, of course, crude oil, and the crude oil was up $8 initially on Sunday night, and then it cooled off, and I think we're up $5 yesterday, $4 or $5, and then the straits were closed there. And or Iran said that there are, and that what is it? What percentage of oil? And I forgot to write that down. Goes through those straits. It's a high percentage, and a lot of it goes to China. And it's a very important body of water. It borders Iran, and they say it's not safe to pass that. The U.S. fired back today, saying that we will cover the insurance and we will make it safe, or we'll have escort. So you have ongoing stuff there, but that's affecting the oil market. And that in turn is affecting the grain markets and even cattle. I mean, it's spilling over into everything. Volatility is picking up. Option premiums are picking up for good reason. It's really a different market than when we left you last week. How is it going to affect grains, though, I think is really where we'll start with all of it, today. And, what we've seen so far is grains following oil. I mean, I don't know how closely you're following. It's hard to keep up. The news is tough to find, surprisingly. Are you having luck on X? Because X is going to be, as much as everybody makes fun of it, that's where you're going to see a lot of the breaking news. But I'm telling you, this is over the last 2 days, I'm not seeing the normal X that I've normally been seeing, and it's very hard to find information.
Well, I can tell you 8 days ago I went deep on hockey.
Okay.
Because of the USA.
And that's your
gold medal winning. That hit my entire week of at least my 4U.
Yes.
Is entirely hockey.
Yeah, and that's not a bad way.
Not that I'm complaining.
That's not a bad way to beat it.
I didn't even know about the Iran. I knew about it.
You kid.
I still get a lot of hockey.
Yeah, and you know what? I'm getting just completely random stuff. It's one's just going to be a street fight that I don't want to watch, and the next one's going to be some AI stuff that nobody. So you're seeing old clips, you're seeing AI. It's very confusing. What I'm getting at is it's almost gone full circle to where you have to go back to your traditional news channels to actually get the latest. And it's been a long time that it's been that way. It's moved away from the traditional channels. Now it's going back. But oil's affecting everything. It's pulled up grains with the idea that because it's inflationary or oil runs away, ethanol is involved, soybean oil is involved. So far, we've had a bit in grains. Now, what we've also seen, and I've been very careful to put out recommendations on the inside or anything else, because we just don't know how it's going to react till we see a little bit of trading. And now we have. So we've had beans really taking the lead here, which makes absolutely no sense. China gets a tremendous amount of oil from Iran and Venezuela. Those are the two countries that we are now involved in, and it has severely disrupted the oil trade for China.
Interesting how that works from a geopolitical perspective, huh?
I can't imagine China's super happy, and they haven't acted happy. But today they said the meeting's still on. So at least the summit's going on. I doubt they're going to be talking soybeans at this summit. It's most likely going to be talking about, if it happens in April, it's going to be what's going on in the Middle East more than anything. But that's not what beans see. They see this is a positive sign. And it was hanging on a thread before this happened, whether China was going to buy this rumored 8 million metric tons of beans. But we're not seeing anything in the cash markets. We're not seeing anything in the spreads that's saying any new buying's happening at all in beans. So what this looks like is a marketing opportunity, but a complicated one. Like, how far can the funds push us? Is oil done going higher? None of the pieces of the puzzle we need are really there. So I'm cautiously hedging into this soybean rally, or recommending hedges.
Let's talk funds for a minute, because you and I were chatting prior today about the fact that beans are getting pushed up, and then they seem to fail almost immediately on open, and then they get pushed back up at the end of the day.
Yes.
It appears funds are defending that position.
Sure appears that way.
Why?
You know, it's a funny question. It's like you would think, and we talked about this last time, these guys have some secret that we don't know. Like,
it's the red phone, it rings, buy.
Yeah, buy. And they're all coordinating. No, they start chasing each other. But this one's peculiar because this one is really fighting it. Whoever is doing the heavy buying here is really fighting it to the point where they're looking like they're building a position that was very similar to the 2012 drought. And when you look at the fundamentals, we have 7-year high ending stocks in soybeans, and then the world ending stocks are really high, and South America is in the middle, literally in the middle, 50% done of harvesting what appears to be a record crop. And I think that it's safe to say that once you get halfway through harvest, that their mind's not going to change a lot. So why? And that's the $1 million question. I look at it a different way. Let's start preparing for how to use this to make better prices on the farm. And I think that's where your concentration should be. What should you focus on to see if this is real? I've talked about this a lot, and we have. Basis, is that getting better? No, that's getting worse. Cash markets, very closely tied. Is that getting better? It's getting worse. How about the carry in the market, the spreads up front? Near record lows. March, May went off negative, whatever it was, 16, 17, which is about as wide as it's been in 20 years. That's saying the commercials are saying, do not bring your beans in. We don't store them. You'll get more money. So that there's nothing in here that says this is real, but the funds are very powerful. Why are they buying it? It doesn't even matter. What you're looking for is clues that they're going to be done buying, and then hedge accordingly. That's the way I would approach it, is just that you don't know why. Let's look at the last two rallies. It would have been two Septembers ago, not last September, the September before. They drove it up $1.20 on very poor fundamentals. What happened there? Fell like a brick. Dropped $1.20 shortly after that. Then let's look at what recently happened. October, if you had the chart, I think we rallied 90 cents, from like the August lows. We went up, very similar pattern, near $1, and everybody couldn't believe it. But even that one was... The China was going to start buying beans, and there was a trade deal done. Yeah. Like, that one was a little more justified, and we really didn't know how much they were going to buy for sure. So there was room for optimism there.
Yeah, they did come in and buy.
That one failed. These guys aren't buying beans and doing well. Now, I'm not saying every single one of them is losing money, but it has been one of the losing propositions they've had is soybeans. So why the laser focus on this? I think it's volatility. I think that it's easy for them to push it around. I think it's the volatility. I think they're attracted to it. Guys that are smart are getting out, and I don't think it's any more than these guys just doing what they want to do with the market, and beans are that market. They can't do it with corn. We've had a lot of short covering wheat. They have trouble with wheat. That's a little bit bigger market. But beans seem to be the sweet spot where momentum rules. And I just think it's that simple. Judging by what's happened in the recent past, and I do think this is a marketing opportunity. Other guys they'll disagree. They'll say, hey, they're going to need a bunch of diesel for this Middle East operation. We'll call it an operation. That's what they're saying. And they're going to use all this biodiesel. And that's like jumping through 10 hoops to get to a bullish. They're not going to use biodiesel in the Middle East. They're going to use diesel. And, diesel demand is going to go up. Then they'll say, well, if it's not that, then it's going to be the biodiesel, things coming up here in March. Or it's going to be the thing. They're just using the news to suit the price action is what's happening. There actually isn't any bullish news for beans. But back to, let's just use it as a marketing opportunity. Call us and we'll give you specific recommendations. We're obviously not going to do that now, but we are using this rally. And we're using it for old crop and new crop. And I think that a guy has to take it day by day, and I don't think there's going to be a lot of clear answers here in the short term. But I think they're providing an opportunity for a guy. How do you feel about it?
Well, I started last week's episode by saying I was out, so I expected them to drop like a brick this week.
Yeah, me too. And it hasn't.
I know the first thing we talked about Monday morning was why.
Yeah.
Why beans? Out of all the things, all the reaction to this operation.
Probably the most bearish one because of what's happening is beans. And it doesn't need to make sense. Markets can say, we'll do our saying right now.
Oh, I love it.
Markets can stay irrational much longer than you can stay solvent, which I think is perfect for soybeans. It doesn't have to make sense, and it doesn't make sense. But if there was one that you would worry about because of what started here, it would be soybeans, and they seem the least worried. Let's look at what Iran imports. Is it that they're a big producer of corn and wheat and everything? No, it's the exact opposite of Russia and Ukraine. They import, they don't export. Or do they import? Well, I put it out on my Twitter that it is about a fifth of what 9 million metric tons of corn from the bulk of it from South America, which is about a fifth of what they produce and export. That's a tremendous amount.
That's a lot.
So it's unlikely they're going to be importing a lot of corn right now or a lot of wheat. And I don't remember the wheat offhand, but it's a tremendous amount of wheat as well. They're unlikely. So you're going to have to find more buyers for this grain that they're not buying right now. Literally the opposite of the Russia-Ukraine war. But I feel like the funds have kind of treated it like the Russia-Ukraine war on like a mini scale, if that makes sense. Like war means buy grains because it did. But in the Russia-Ukraine war that we have still going on, it was a big producing area and a big shipping area. That was what they were worried about. At the time, we didn't know how much was going to be affected. So you err on the side, it's going to be a lot, and it goes way higher. And that's what happened. This is literally the opposite. They don't produce it, they import it. And the other countries around it that are getting hit import as well. So net, we need to find a new home for a lot of this grain that Iran, so that is not a positive. But then oil is a positive. So you got a lot of cross currents. And, before we ramble on too much about this, it's a complicated thing. But net, it looks very negative for grains unless oil was to move up substantially from there. And let's move to that. What did happen the one time oil moved way higher? You weren't in the business at the time, but I was. Oil was going to, George Bush was giving a speech on TV, and he mentioned ethanol. That was the beginning of the ethanol boom. We went from wherever we were, 3-something, 2-something, to 840 without stopping in June, and oil was going to $150 a barrel. Oil was the driver, ethanol was the driver, but oil was really the driver of all this inflationary buying. Gold and silver didn't react like they are right now even. It was the grains. That was the big inflation play. It went to 840 on very bearish fundamentals. There was full carry in the corn market the entire way up. I remember this perfectly. And I had a client at the time buy some cheap corn puts, and it went from, I won't tell you the dollar amounts, but it went from 8-something to 297 by September. And that's kind of what I'm driving at for this. If the fundamentals aren't real, eventually the gravity does find the grains, unfortunately.
The problem there is that word eventually.
Eventually. And that's why we did our, the saying that we did, the trader saying that we just did. You can get frustrated with the market, but it can drive you into madness and margin calls and eventually to the sidelines before it falls. That's a very common story. So be very careful in these markets. They can be careful more than you think they can be. But that was the most comparable thing we have, and I don't even think that's comparable. We were just at $75 oil, 4 or 5 months ago? Mm-hmm. You know what I mean? And it $75 oil does not affect grains in the least. Like, it's somewhat supportive, but now the U.S. dollar's come up a ton. You know, at the same time, we've come up in price for everything. But out of all this mess that we have going on, the one thing I'm curious about is corn didn't really want to go up this whole time. Only recently has it gone up a little bit.
Yeah.
And so what if wheat falls and beans fall now? What's corn going to do? I mean, because it didn't follow the rest of this stuff up. You know, is it going to just sit still and say we didn't go up with you? Well, maybe, because the funds really aren't long corn.
I didn't look at export numbers yesterday. Was corn
the shipments, which is always backwards looking? Remember, these are the inspections, meaning the stuff that actually ships out. Very important category on Monday. You can have all the sales on paper, but if you don't ship it out, it's not real yet. Just like gambling, like you'd be up thousands in the blackjack table. If you don't leave that table, you don't have those thousands. So the inspections are really important. They were good for beans and good for corn, but that's stuff that we had sold earlier. Now Thursday, the new stuff the new stuff would be Thursday. That's the new exports that haven't shipped, but they're on the books. That's been poor for a couple weeks in a row now for everything.
Because that was we talked about it all fall and into January, that was the one thing for corn was the exports.
Oh, corn exports are still excellent. The new exports have been stumbling a little bit here lately. But that's been the one lone bright spot. Wheat's been good, you know, over the last 12 years, over what it's done. But it's still only slightly above the 5-year average, you know, not much talk. Where corn is like 450 million bushels over last year, which was a record. Like, it's been outstanding in corn, which leads me into, that's why I'm pushing the bean hedges. And again, if you want to know what we're doing specifically, give me a call. Where corn, I'm a little more standoffish. I think I've been this way, and we've been talking about this. Like, this doesn't seem like a smart idea to take the upside out of corn this time of year. You got to go back 2 months ago and listen to what we were talking about. We've said it repeatedly, and I don't know why guys are in a hurry to market this corn. Is it they fear the acres are going to increase? Well, now with fertilizer and all the rest, now acres are just completely who knows what. We don't know. So back to corn, it's the one that I'm a little more apprehensive of hedging. You know, new crop. Where beans, it seems like it's a little more clear. But that's kind of where I stand on that. And wheat, do I even need to talk about wheat? Like, every one of these rallies that we've seen has been an opportunity. I would think this one is too. It's always tough, like beans. Like, how high can this go? Well, the shorts are covered unless these guys want to get long wheat. You know what I mean? I would, I'd be working on that too. But you know, let's. I mean, we have so much to cover. It's kind of, we don't want to make it a scattered episode. We just want to kind of, how is this helpful for your grain operation hedging cattle and what markets are being affected? So that's kind of what we're trying to do here.
Yeah. I mean, it's going to be a scattered epised because there's a lot of different things going on. Yep. I mean, you brought up silver and gold too a little bit, and I was looking. I mean, they haven't reacted since that little downturn. It was a high percentage wise, but
yep,
they've been kind of holding their own too. I think they were down a little today, but you know, what are you seeing in some of those outside, you know, like whether it's the interest rate? We should probably talk the Dow and the S&P and that stuff.
Yeah, it's affecting the U.S. dollar. It's a wide range of markets now. The dollar is going higher. Gold and silver initially did, and then they've come off. You know, and historically, they've not been a flight to safety in these sort of situations. So they're kind of hard. Bitcoin, you can throw Bitcoin in there. You know, nothing's really going up, but surprisingly, oil and the grains. And I think to gauge what's going on, and I kind of got off track a little bit, but there's a lot of confusion on the phones. Like, people don't know what any of this means, and they're hearing a lot of different opinions. And my advice is to watch oil. Like, you're going to hear a lot of stuff about what's going on. Oil is going to be the best gauge as whether it's intensifying, getting better, stabilizing. And what we were at $5.50 50 this morning in oil, and now we've cooled off to up 3 something. Use oil as your gauge to how well it's going, for this operation they have in Iran right now. And then the gold and silver is kind of misleading. Like, you had that big day up, big day down. What I think you're seeing is massive shifts of money around in markets, wildly unpredictable. You saw that in cattle today. Cattle opened down like 2-3, and then it was bought up today. And it's this price action's confusing. It was confusing during Russia, Ukraine. This is normal. Like, unfortunately, this is normal. You just have to take it day by day. You shouldn't have all the answers. Nobody has all the answers. Be very cautious. Don't fall in love with positions.
But be ready to take advantage.
That's a great point. Yeah. I have been very busy for the last couple of days, and guys have been taking advantage of obvious things. Whether it's bull spreads in crude oil, whether they're using micro contracts to get involved in energy because they want a little lower risk. Guys have been getting involved. You also have to stay on top of it, and you have to be willing to get on the sidelines very fast. These do provide very good opportunities, especially when volatility comes up. Our good Fred Thader Farmer put it out there. Unfortunately, his best setups have been on these situations, where it's been war or, military stuff, Russia, Ukraine. And it's the truth, but it does provide the opportunities. Be ready for them, but also be very, very careful in markets like this. Don't fall in love with stuff. Look to move to the sidelines and stay on the sidelines if you're uncomfortable. Be very careful, but it does provide opportunities for the guys that are watching every tick. It's provided a lot. Every single time this happens, it does. It's not the most predictable thing, so you do need to be on top of it, or at least use limited risk strategies. And that's where I would be leaning mostly on limited risk stuff. I think is options.
Yeah,
that's the way to play it. But it does provide those opportunities. So you do have a good point. Be ready to act. And don't hesitate. Pennies fall through the cracks when this guy. They don't care about $300 to $500 anymore, which you're fighting tooth and nail to get not that long ago. That's the kind of stuff. So you can take chunks out of the market and be all right. There were strategies on Friday in crude oil that guys called. They didn't know this was going to happen, but they're like, "Is there anything we can be in if this does happen this weekend?" And there was. There was some very good. So at least 5 guys called before the oil closed on Friday, and you're never happy about a war, but they were happy that they asked about it, and there was positions to put on. And some of it was limited risk, some of it was spreads. Like the April May spread moved quite a bit. Anyways, there was opportunities, and it does create opportunities as a trader, as a hedger. You look for this. I think that it's creating an opportunity in soybeans. We're looking at that, and that's the way I would handle these markets. But be very, very careful, especially if you're on Robinhood on your phone, kind of doing it by yourself, looking for answers on Twitter or Facebook. These are not the markets for you, probably, because you know what I mean. Not that we have like ultimate real time information, but still we have enough sources where and we've seen enough of these markets where we're comfortable in it. Don't just try to start outguessing everybody, because there's money flow. Like we were just talking about in cattle, it doesn't need to make sense, or gold and silver. Like you're going to see unusual moves. And that's just the way that these kinds of markets have always been. And I would expect the same thing here. It doesn't need to make a lot of sense, and just be very careful in them.
Yep.
That's the way I would approach it.
Makes sense. What else do you want to cover today, John? We're running up on time here.
Cattle. We have to talk cattle. We have been, and the insiders know, like we've been talking cattle quite a bit in hedges. Still talking that. We had a nice little battle back. I didn't like to see Kansas trade on a Monday at 238, which they would call that $6 lower. Warning, there's warning signs everywhere in cattle. The guys in the sale barns are going to disagree with me wholeheartedly. They tell me there's a 3-year cycle here yet, and it can't go down. And if I was buying cattle in the sale barns for this price, I would tell my wife that too. Like, it can't go down for 3 years. That's exactly what I would say, and here's why. But the truth is, no one knows. It's futures. It's not. today's price. The futures have said, here's where I think the cattle is. The numbers don't work. They don't work for the feedlots very good. And of course, everyone's going to be different. We saw a big feedlot go out of business. They don't work for the packers. No one's feeling sorry for these guys. Don't get me wrong. But it's a business, and they have to make money eventually. And if they don't, they'll walk away. And one packing plant did. The numbers aren't working. The cow-calf guys, the guys that work very hard and deserve this, they are making money. It makes sense. Like, they're producing the cattle, and they're making the feed's cheap, and it makes sense. The operations. There's going to be other operations that are mixes of a lot of different things. And there's going to be sweet spots where guys still are making money in this. But when you look at the raw numbers in the fat and feeder spread, or live cattle and feeder spread, the numbers clearly don't work. So if it's not working for the packers, it's not working for finishing cattle, just generically, and it's not working for the feedlots and other sorted industries, like, you're getting to that price where it doesn't work, and that's how markets top. And it's starting to feel like that in cattle to me. I'm not cheering for the market to go down or anything, but it's like, business-wise, it has to work, or you have to get to a price that works. Two things I worry about is the border opening and the constant importation of beef. That's going to continue to ramp up. It's going to affect markets. Very good idea to talk to your advisor, or give us a call. We'll tell you exactly what we're looking at cattle. The bad news is nothing's cheap. Nothing's easy. If you go the cheap route, meaning like selling a call, buying a put, you're going to spend a little bit more money than you want to, and you have a lot of risk. If you just buy the pure protection, it's going to cost you an arm and a leg. Generically, with any length of time, $17 for a feeder cattle. There's a million different strike prices, but I'm just saying near the money is roughly $17. So it's not easy, but still these conversations need to happen. I think cattle's giving off a lot of warning signals here, but it had a nice day today. Started off rough and came back, but it was underpriced. Quickly, I got off track on the corn. I wanted to mention this March 31st report. We talked a little bit about it even today. Strangles or straddles, which buying a put and a call, we're headed towards a report that this strategy might be a viable strategy. Of course, a lot depends on the volatility and how cheap you can get stuff. But buying volatility into this report, which is what these strategies are, you're buying a put, you're buying a call. You can't be wrong unless it's quiet. You're buying volatility. So that's the basics of that. You're purchasing both. So let's just say you can buy, maybe you can look it up quicker than I can. Like you would have, May would be one of the shorter time frames. You wouldn't necessarily use May, but it would be one of the shorter time frames that you could use. Sure, you have April. Which actually doesn't get you the report. Forget April. It's May.
April won't. No.
So you're gonna have to. That's the least amount of time. These are gonna be the cheapest strangles and straddles. And what's a corn?
Yeah, just remember. I mean, it's gonna be a month from now, so you'd certainly want to watch.
Yeah, we're not doing this, and nor is this a recommendation. But it is one of those reports where
12 to 13 cents each
on either side.
Yep.
So it means the put costs 13 cents at this. At where the price is right now, and the call costs 13 cents. So what you do, let's call it 25 cents, 12 and a half cents each, split the difference. So what you're doing when you buy this is you're saying it's either going to move up from this report 25 cents or down 25 cents in the end. That's what you're saying. But if there's volatility after this report, let's say it moves 12 cents in one direction or the other, most likely what you bought for 25 is going to be worth 35 or 36. You can't know, or even 29. You don't know. But as long as there's a reaction that's volatile, you're going to net out on that. I wouldn't call this even an advanced strategy. It's just kind of something that falls through the cracks. But I like to talk about it when we get through by USDA reports that they could work in. Again, not a recommendation. Lots is going to change even before we get into that, before we get to the report. Corn could rally 50 cents from here, and it looks like a terrible idea. We don't know.
Unless you bought that straddle today.
Unless you bought it today. Then you'd be happy. Exactly. But it's kind of why I like that strategy is because you can't be wrong, for a little length of time because you're buying a put and a call. You don't need to know market direction, and that's really appealing to me. I really like that. You're buying volatility. So will it make sense into this report? We'll see, but it's something that I wanted to bring up because I do believe there's going to be a lot of volatility around these numbers, and now with this, with the costs associated with corn going up with the Middle East, is that going to sway acres? Well, Twitter seems to think so. Like some people on Twitter, you're seeing that pop up a little bit. The conversations I'm having, definitely not. Like, we're in West Central Minnesota. We'll talk to a lot of guys in the Dakotas, Iowa, that way. You're just not hearing a lot. I'm switching to beans. You go east, and you definitely, it switches easier. I'm not saying they're gonna switch. It switches easier though. But the West, as expensive as it is, they trust the yield more. I just don't feel the switch that Twitter feels. But then it is Twitter, so I shouldn't even be, considering that should be part of my, analysis. But you like to get a feel for what people are saying. But it does seem like a report that's going to have some action. Where the last couple of years, not so much. I think it was really negative last year for corn, a lot of corn acres. But this year's mysterious. No one knows what everybody's going to plant. And I don't think it's like a normal year. Unfortunately, there's too much acres of everything. So it's not an acre battle, which is interesting. This is more of a hot potato that you don't want. Like, here, you get the acres beans or you get the acres corn. But anyway, we should see some volatility, and we are seeing volatility pick up in the grain options. But we'll just say these are exciting markets. Unfortunately, it's bad circumstances that's made them exciting. But I do believe it'll provide a lot of opportunities. If you're confused out there, everybody is. But I'm telling you, watch basis, watch spreads, and go with your gut. Go with what you think. If you think, hey, I'm afraid of weakness in beans, I want to get some beans marketed, go with your gut, go with your instincts on this, because that's really all that you can drive with right now. If you look at basis spreads and everything else we've talked about, you know what I think. And it's just a matter of trying to time what these funds are offering here, which I think is a gift.
Absolutely. Well, John, we should wrap it up there. Why don't you leave your number?
Yeah, hopefully we kept it somewhat organized. There's lots to cover, and everybody's got their opinion. We definitely don't want to get political. We want to see how this plays out and try to make better hedges in all this noise. Give me a call at 218-731-1578, and we'll go through strategies with you when you're talking to us. Email us if you want. That way, we can kind of follow the rules. You can't give recommendations out over podcasts, nor do we want to.
Thanks, John.
Sure.